Welcome to Trading Nation. I'm Dominic Chu. Joining me now is Frank Holmes. He's the CEO and CIO of U.S. Global Investors. And Frank, a lot of people talking about the markets at record highs right now for stocks. However, certain commodities out there are getting a lot of attention as well. Gold comes to mind. Oil comes to mind. Gold in particular right now. How can we still see a bid for gold given the fact that things seem to be so hunky-dory for the U.S. and perhaps even global economy?
Well, you know, at the beginning of the year, gold started off negative, and then we had a surge in the CPI numbers, and then gold started to rally again because bonds had a negative rate of return. That is, every 30 days, basically CPI comes out and it resets. And CPI went to 2.7, and then it fell back to 2.4. And so for the past 20 trading days, gold is unraveled with that. And there's just a perfect inverse relationship. I think it's temporary. I think it's going to be very difficult. Last week, I was in Washington, D.C., visiting the Treasury Department and going over and visiting the Eisenhower building to see White House staff. And really, it's going to be extremely difficult for President Trump to implement all the changes he wants for infrastructure spending, et cetera. So that means we're going to live with low interest rates, and that's bullish for gold.
Low interest rates, bullish for gold. The idea here is possibly that, I mean, there are so many cross currents. When I think gold, I think of a couple main things. I think either it's a safe haven trade when things are chaotic around the world, geopolitically or otherwise, or I think of it as a real inflation hedge, right? In case things really start to heat up or overheat in the economy. It doesn't seem like we're on really the verge of either of those. So what is it about, what's the catalyst that really gets that bull case for gold kicking into overdrive?
Well, the two things you mentioned are very important, and they're the fear drivers. But then there's the love driver, and that's also very significant. And that is the rise of Chindia, affectionately known as China India, which is 40% of the world's population. And I call it the great love trade, because for the past 15 years, we've seen continuous consumption of gold. And it's another reason why it went so high in 2011. And it's this continuous pattern of major consumption. Now the Chinese in Shanghai become the gold price maker. It used to be the gold price taker. Now they're the maker. So that is an important shift to add to the dynamics.
How exactly do investors go about most effectively capitalizing if they do want to take that bullish view on gold? Do they go out to their local pawn shop and buy the physical stuff? Do they do it through ETFs that track gold physical, like the GLD? Is it through miners? What exactly is the most effective way for investors to go about trying to take that bullish view?
If you're looking for the love trade, you go buy nice high carat gold, 18, 22 carat gold jewelry. That's the best way to do it. And you can buy them in secondhand shops, or you can buy them at a discount to Fifth Avenue prices. However, when it comes to picking and trying to trade on gold, you clearly see it's gold stocks. And it's also very evident what's taking place with the GDX and GDXJ, which are the two big gold equity ETFs. And around them are 4 ETFs which are highly leveraged. Nugget and Dust, 3 times bearish, 3 times bullish against the GDX, which is big cap gold stocks, and JNUG and JDust, which are for the smaller cap GDXJ. Now it's a mouthful, but what's really important, out of $200 billion of market cap value in gold stocks, these 6 ETFs represent almost 20% of all the dollars that was in the gold equity. And further to that, they trade $3.7 billion a day. And now the GDXJ's become overinflated with only too many juniors that can own more than 20%. They've had to reposition and go back to more majors and other mining companies. And you're seeing a bit of an unwind. And that's had a bigger impact and has provided great buying opportunity for a lot of these small cap, mid cap gold producers on a relative basis, which are throwing off free cash flow.
One more question for you to kind of cap things off here. As we talk about the trade so far this year to date, it was also last year when we saw gold prices and gold miners run up through the course of the first half of the year, only to see that momentum wane this time around. Do you see that same thing happening this year?
It's a great question. And what I try to point to your listeners is that whenever the rates go negative, whenever we see the 5-year government bond going to a negative rate of return, you then see gold start to populate and rise. Now the threat of rates are now 90% probability rising in June, gold sells off. And it sold off going into December, and then it had this rally coming in February, March. So I think we're going to see these seesaws, which are great trading opportunities for gold investors.
All right, Frank Holmes, U.S. Global Investors, thank you so much for joining us here on Trading Nation. A great take on gold, a great take on what's going on dynamically with that environment. We appreciate your thoughts. Thank you so much for joining us.
Thank you.
And thanks for joining us on Trading Nation. I'm Dominic Chu. For more, go to tradingnation.cnbc.com. Until next time around, we'll see you.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.